Hey, what's up, guys? And today I want to talk about the 6 most important lessons I learned from Ray Dalio's latest book, The World's Changing Order. If you are going to be learning investing and you think macroeconomics has a huge impact on the stock market, which it does, then I would definitely recommend you to read this book. I'm going to quickly summarize the first quarter of this book. This is where I'm at, and share some of the most profound and life-changing lessons I learned along the way. It can be perfectly summarized by this chart on the cover of this book. Now, what you see on this chart, which he explained in the book, is that every country has its own boom and bust cycle. If you're investing in the stock market, you'll be pretty familiar with the boom and bust cycle as well. Now, what's interesting is that from his research, he figured out the approximate ratio of this boom and bust cycle. It is around 9-1. So 9 years of boom and 1 year of bust. Now, this can be used as a reference point. It's not going to be exactly, but I think out of every 10 years, 10% of the time will be a bust, which we have seen the 2008 market crash, dot-com crash, and right now 2022, after the COVID, another crash. So the dot-com crash is around 2 years. The housing crash is around 1 year. And right now we're in a 2022 market crash, and it's approximately 7 months, and we haven't seen the bottom yet. So this gives you a good reference point, because if you're in the middle of the crash and you know it has been 7 months already, then you're looking at maybe 6 more months to 12 more months remaining. Lesson number 2. Now, within this book, page 52, Ray actually has an image of the cycle of a country, from its beginning all the way till the end of the cycle. Now, it is possible for a country to have multiple cycles, which is fine, but what's important is what are the indicators that lead to a rise in the cycle, the peak, and the decline of a cycle. So I can quickly go through this with you. The first one is the rise. So leadership, investment in education technology, strong income growth, strong financial markets, and the overall market. There are a couple more additional things here, but those are basically the key. So if you are looking for a bull market, then the country you're investing in or the company you're investing in must be investing in technology, making the world or the company more productive, and it's having high income growth. So that is really fundamental analysis there. Now, when you reach the top of the cycle, you become less productive, overextended, losing competitiveness, and you have a greater wealth gap. Now, some of these items actually apply to investing in a specific company, but in this case, he's talking about a country. At the end of the cycle, you have large debt, printing money, internal conflict, loss of a reserve currency, and this is actually one of the key things he's predicting for the US market, weak leadership, and civil war as the ending. So you can see if you're checking the boxes for US has large debt, US printed a lot of money, US has quite a bit of internal conflict between the political parties. Right now, the power for US as a reserve currency is actually declining as well. And for weak or strong leadership, that is questionable. And there isn't a civil war or revolution yet, but that is really the final step. Looking at this chart, you can actually kind of gauge where each of the countries are located. And you can also gauge where the companies are located as well, which is actually quite a useful guide. Lesson number 3. Now, some of the things that Ray studied was actually the previous empires. There is a dominant empire within the 50 to 70 years that it is ruling, and then the next empire comes up and rules for another 50 to 75 years, decline, and then the next empire comes up. So the previous 2 empires are Netherlands, and then United Kingdom, and then now is USA, and his prediction for the next empire is China, because it checks all the boxes. Now, one interesting thing is that Netherlands, United Kingdom, after their decline, they actually never came back. That is actually quite an important observation, because once it gets overtaken by the new empire, in this case China, it is possible that US does not come back. Now, in his book, he does say there are possible ways to kind of change course and reverse this trajectory. It is possible that US can come back, or it is possible to have multiple cycles that the country continue to grow as well. Right now, his money is on China. Lesson number 4. Right now, China is heavily investing in infrastructure, technology, education. You see this rise of this group of educated people that are having high income growth, spending more money, and the country itself is becoming stronger and stronger. And they have auto manufacturing sites within China. They're investing heavily into semiconductors as well. So you can see China is really about to reach, or they are currently in the peak phase of their country's growth. And if you look at how big China is, there's actually a lot of growth potential for years to come, depending on how they play their cards regarding the political situation. Based on Ray's analysis, US is actually heading into the decline phase because of all the money printing, because of COVID. And COVID is actually one of the triggers for the decline. You get weaker leadership, which can further spiral down into more internal conflict, and US losing its reserve currency status, meaning it's harder to borrow money, so on and so forth. With the Fed increasing the interest rate, it is actually making it more difficult to borrow money and is reducing the amount of money in the market, which is causing the stock markets to go down. If you're looking for a more visual indicator, then you can just look at S&P 500, and it has been down 20% year to date. So you're actually going through a contracting cycle of the economy. If you look at unemployment, then you will see a lot of companies like Tesla or Facebook are slashing hiring, or they're even firing some of their staff. It shows that the economy is going through a contracting phase. The last lesson is really the cycle of the financial market. The expansion and the contraction of liquidity actually has a huge impact on the economy. So in this case, more money means more business loans, means more business activity, means times are good. In order for that to happen, the interest rate needs to be low. Right now, Federal Reserve is increasing interest rate very rapidly, which actually slows down or reduces the amount of money in the market, which then takes money out of the market, which causes the market to go down, causes the economy to contract, which causes companies to be more conservative, and they don't hire as many people, so that they're not growing as aggressively, so then the company's valuation are going down, people are losing jobs. That is the macro environment that is being controlled by the Federal Reserve. Those are really the 6 lessons from Ray Dalio so far. This is a great book because I think he said a lot of things based on data, and I think he's right. It is not a very likable future, but it is happening in a sense where US is crashing. He's predicting that US will crash. And yeah, that's where we're in right now. So it's actually very timely to read this book. And if you're interested, you can pick it up. And if you're interested in learning more about investing, then you can check out the first link in the description. And that will take you to the free training on my website.